Hello and welcome to this video on investing myths. You may have thought about investing on your own, but hesitate because of common misconceptions heard through friends, family, or the media. Take control of your financial future by first overcoming the most common barriers. In this video, we will dispel the 6 most common investing myths. And myth number 1, investing on your own takes too much time. Never before has the world of investing been so accessible to everyone. The first sophisticated investors once relied on carrier pigeons to relay information and quotes. Technology has completely changed the way information is transmitted and has allowed the average investor to instantly know more information than at any other time in history. Of course, there is no shortage of misinformation, so an educated investor must be able to quickly and easily filter information to make smarter decisions. Myth number 2, investing in the stock market is like gambling. People connect the concepts of investing and gambling because both involve money and both appear to deal with the element of chance. And although it's true that blindly investing is similar to closing your eyes and rolling the dice, successful investing is never a game of chance. The art of investing is primarily concerned with balancing risk and reward. Gambling does not allow for anyone to change the probabilities of the game. However, with skillful investing, one can reliably predict outcomes when it comes to trends, patterns, and laws of supply and demand. Of course, no one knows what will happen from one day to the next, but investors have been able to put the odds in their favor, which is impossible to do with gambling. InvestTools believes that with proper training, you can learn to manage risks and determine your potential rewards. Myth number 3, paying a professional is better than making your own investing decisions. Many people pay a lot for a professional to manage their money. This seems to work very well if in fact that professional can consistently outperform a benchmark like, say, the S&P 500. The fact is, many professionals fail to beat that benchmark over a long period of time, and worse, continue to charge fees for their efforts. Interestingly, there are real disadvantages to being a client of a large money manager. They cannot move your money as quickly as you can, meaning they may be very slow to change their model when the market changes. Considering the cyclical nature of markets, that can mean the difference between a bad year and a great year. Also, with the tools and education available to the average retail investor, you can learn to follow trends and protect profits even more efficiently than professionals. Plus, it's much more likely that you care about your money more than anyone else. Myth number 4. Investing on your own increases risk. Investing without the right education is truly risky because in order to balance risk and opportunity, you must be able to create and implement an informed investing plan. Many investors made a lot of money in the 1990s, only to give back all their gains later when the market retreated. Yet with proper training, investors can reduce their risk and lock in their gains. At InvestTools, we teach you a methodology to identify entry and exit strategies, how to analyze the broad market, investigate the fundamental strength of a company, and how to manage your own risk. Myth number 5, investing is as simple as knowing which stock to buy. Knowing which stock to buy is important, but even the strongest company in the world is not always a good buying opportunity all the time. And even if you manage to buy the stock at the right time, it is often more important to know when to sell the stock. Successful investors repeatedly stress the exit strategies make a larger impact on investment performance than buying strategies. There's a theory that suggests it's possible to make money in the stock market even when choosing stocks randomly if proper money management and exit strategies are applied. Myth number 6, investors who invest on their own are intellectually gifted. There is no correlation between high IQ and investment performance. But it is true that training and education can improve investors' chances. Getting the right kind of trading is critical for investment success. Remember, you can keep it as simple as you want or make it as sophisticated as you want. However, anyone can achieve their goals with the right plan. The key to overcoming the fear of these myths is education. The rewards of learning a skill that you can use for the rest of your life are enormous. Just like any skill, it must be developed through a combination of knowledge and practice.